Hello everyone. How are you guys doing? Hope you guys are doing great and hope you all are doing amazing. I welcome you guys to this yet another edition of the Chat Talk Before Bed. Okay, so you all are highly welcome once again to this week Chat Talk Before Bed. Okay, we are going to be discussing some certain things. First of all, we are going to look at how the week played out, and then we'll touch more on risk management, trading journal. We have to solidify our understanding of market structure as well. Then there are some certain things because the aim or the objective of this chapter before bed is to actually talk about some you know secrets or some important details that we have to put into consideration whenever we are trading. That is the most important objective of this Zoom call. There are some, tips and hacks that we'll have to, put in to help us to be able to improve our trade. So there are certain things like trade management, trade entry, okay, and also asset to trade as well. So we're going to touch more on some of these aspects during this Zoom call. Okay, so in case you'll be watching the recording, after watching the recording, if you have any questions, of course, you can actually reach out to our support channel. I'm always available to answer your question. So just reach out, we'll be able to answer your questions. Okay. So first of all, let's look at how the market is playing now. I'll start off with synthetics anyway. We'll look at the tree that is running, the ones that are running on them. We'll look at the one that are running and we'll look at the entry and then and as well the trade management as well. So we'll now go into forex and also other assets like gold and BTC as well. So let's see how far we can cover during this section, okay? Okay. So let's kick off the section. Let's kick off the section. So we'll start off with synthetics. First of all, let me look at the ones I have. I will look at the current running ones. So I have V100. I share the setup with everyone. Everyone. I share the setup with everyone. If you watched our last chat talk before bed, I talked about how to mark out key levels or using the MT5 platform. Okay, so price was actually coming to this key level. Okay, this is a key level on the weekly time frame. If you look at the MT5 platform of the reef, you'll be able to see all the weekly and monthly data. But on the trading viewer platform, you'll not be able to see those information. And then we'll draw our analysis or our bias from the weekly key level. So price was actually, even from this 24-hour chart, you can as well see that this is a key level. Okay. So price was actually coming to this key level. I shared the setup with everyone on the group. So when price came to this key level, all you have to look out for is to see if you have a valid harmonic setup into this key level. That's the first thing we have to look out for. So we'll check if we have a valid harmonic setup into this key level, right? So the first thing you have to do is use your part two. If you cannot be able to determine the setup right out of the bat, you can use the part two to mark out all the retracement and extension structure you can actually as you can see within that particular point in time. Okay, that will help you to be able to identify which of the harmonic pattern it is, if any of the harmonic pattern is it. Okay, so that is what you have to do. So that is what you have to do. And right here, if you use the part two, you can start off from this lowest single. You can see that we have a lot of retracement, but you have in mind the kind of harmonic pattern you're looking at for. Okay, you can see there's a retracement here, and then we'll have this, and then as simple as that. It's just that simple. So what is now left for you is to take the measurement to know if actually this is valid. You can see price came to that key level, which aligns with the harmonic pattern of shark of 0.886, and that is just it. It's just that simple. If you can be able to get a hold of the whole concept, everything is just simple. And you also learn how to allow your trade to run. I'm going to talk about fear to hold trade, and also greed, fear and greed, which affect our, and also patient as well. Okay, so that was the setup we had here. Then entry was on the 4 hour time frame. Okay, entry was on the 4 hour time frame. Now, I actually asked members of the community this entry. I told you guys that now what you need to look out for is the reversal candlestick formations. First of all, when price dropped to this key level, I told you guys that this guy is not ready. I told you guys it's not ready because of the kind of candlestick I was seeing here. Okay, it was not ready. I'm looking out for Morning Star, liquidity sweep, or seller's exhaustion. These are the three reversal candlestick formation I was looking out for. It's just that simple. If you watch the videos, if you actually if you study the course, you understand it. It's available for you guys. You just have to take your time and do it. Nobody will gonna do it for you. First of all, came here, there was nothing here. This is not exhaustion, it's not Morning Star or anything. This was supposed to be a Morning Star, but you can see that this is a failed Morning Star. And whenever you see a Morning Star like this, please don't trade it. Don't trade it. This one, see this type, don't trade it. I really want to see that bullish candle. This one protrude outside just like this. This is a very good confirmation. But you see those ones that after trading and close just at that open of that bearish candle. It's a failed morning star or evening star, the case may be. Okay. So yeah, price push all the way up, which was of course, is giving us that bullish intent, and that is very wonderful. But this was where entry was triggered. Okay. We now got a bearish candle that came into this key level, and then series of bullish candle that did what? That engulfed it. Entry was at the close. You can see how price came there, precised. Price came back there. If I zoom in, I will see that very clear. Price came back there, tap into that level, and then off we go. Okay. And the trade is actually currently on. Let me share the MT5 execution of the trade. The trade is currently running right now. You can see it's running smooth, and stop loss is in profit already. So all you have to do is to manage your trade. How do you manage your trade? Let's talk about trade management. And this is what you need to do. Use the 50 EMA to manage your trade. Use the 50 EMA to manage your trade. That is all. So you don't need to be scared or anything. All that. Use the 50 EMA to manage your, provided that price have traded above the 50 EMA. This is the 50 EMA. Let me just double click on that. Beautiful. Provided that price have ended up trading above the 50 EMA on the 4 hour time frame, even if it's on the 2 hour time frame, or even 1 hour as well. Provided that price have traded above the 50 EMA, just hold your trade. Move your stop loss to break even and hold your trade. Okay, 50 EMA, 50-day moving average exponential is a very powerful indicator to show trend if we are strong bullish or strong bearish. Okay, so that is that on V100 Index, and that is as well for other trade that is running as well. Okay, if you look at most of them also, that is the same thing. Okay, that is the same thing. For this V100 Index, some people are asking me if this was a valid shark. I told you guys that yeah, it's valid because even though this retracement is not up to 0.382, it is not a required measurement for a shark pattern. We only want to look at for this extension move. Let it be minimum of 1.13, and this one to be 0.886 or 1.13, as the case may be. So we want to make sure that this is minimum. Can see it was 1.618. Beautiful. So minimum requirement is what? 1.13. This extension is not required, but you can measure it, but it's not required. In the case of 5-0 pattern, that is when we start considering this one. But then there is nothing like that here. 0.88, you can see our price tested there. So now what do you have to do? Go down to the 4 hour time frame to do what? To wait for entry. Okay, you go down to the 4 hour time frame to wait for any of the reversal candle formation. Now we took a loss on this trade. We took a loss on this trade for the first time, and then price came back again for the second time for a re-entry. So price came back for the second time for a re-entry. Let me check that if it's working now. It's working. Good. So when price dumped into this key level, first of all, this is nothing. It is not a liquidity sweep. So this was a fair liquidity sweep. This bearish candle would have taken out the high of that bullish candle to form a liquidity sweep with a confirmation candle, and then we can take our entry from there. So this one, there is nothing there. Reversal candlestick formation is your confirmation. You just, take your time. I've even provided it as a PDF guide for you guys. I provided it as a PDF guide for you guys on the e-learning platform. If you join the HSM e-learning platform, you have access to all of this information. I don't know. I just hope you guys are not being distracted by anything. Like, seriously. Like, seriously. A lot of people struggle with entry. A lot of people struggle with entry. You will have a great strategy, but the problem is entry. And then here you are. You have a blueprint for entry, and then you're not. I mean, let's be serious, guys. Let's be serious. If you really want, if trading is actually something you want to do long term, okay, it's not something that you want to just make some, quick buck. You something that you want to do long term, then be open. Ask questions. Ask questions. If there's something that is not clear to you, man, ask questions. That is how to learn. When I was, jungling from one strategy to another, any person I'm learning from, people I pay to learn from, I always bombard them with questions. Whenever they call for Zoom call, I'm always present. Even though at the end of the day, I didn't even end up using that strategy, but something I learned from that helped me to, build my experience around trading. So it's all about showing up and being committed. That is just it. So this was a confirmation entry. So this was the first entry we had on this trade. This was the first entry we had on this trade, okay? Liquidity sweep with the confirmation candle. Entry was an overlap between the two candles. Stop loss few pips above the high. Price gave us more profit and they took us out in a loss, okay? Which was fine. So price gave us more profit, took us out in a loss, which was fine, okay? So second entry we had was supposed to be here, but I even came in very late. I came in very late. I didn't catch the entry on time. So second entry was here. This one is called buyer's exhaustion. Buyer's exhaustion. Look at it. Buyer's exhaustion. A bullish candle that dump into a key level or a zone, follow with series of what? Bearish candle that engulf it. Engulf it. It's simple. You have the PDF guide. You have the course now. So this is the second entry. This is the second entry. Entry is here, but I didn't even enter on time. This was where I took the entry. I took my own entry from this place. This is another bias exhaustion as well. So my second entry was from here. Second entry was from here. Let me share the MT5 execution of the trade. Let me share the MT5. I've shared that of a V100 index. So the trade is running. I've already moved stop loss to break even. So the trade is running very well. So entry, very, very sharp. Very, very sharp. Very sharp. Now you have your bearish candle. This was a failed morning star. Failed because you can see how it didn't engulf this bearish candle very well. So I was just waiting patiently. When I saw this bearish candle that dump into this key level, I use my rectangular tool to mark it out. I want to see how price will react from here. And then I saw first of all, I saw a bullish candle that swept the bearish candle. I said, okay, fine, I was just waiting. Then I saw this bullish candle, another bullish candle that engulfed. After the close of this bullish candle, I took my entry. And this is where we are. So it's just that simple. If you just study the course, you get used to it. So for V10, where are you? V10, V10. Yeah, so for V10, this is it. It's running. I didn't enter on time. I think right now I might need to move. Okay, this sell limit, I placed sell limit there, but it did not trigger. The sell limit did not trigger. So the sell limit, this was where I was supposed to take the entry from here. I didn't get in on time, right? So my second entry was from here, you can see. And then I placed a sell limit. I might even move this. No, this is already. The sell limit was supposed to be here. I was thinking that price would come back there again, but it didn't come. So I might even delete this sell limit. I don't even need it anymore because it's already a failed stuff. It's already a failed. And just delete it. Good. So second entry was from here. What do we see here? Buyer's exhaustion as well. A bullish candle that dump into this place, followed by a series of what bearish candle that engulf it. Entry at that point. Sweet now, sweet. Confidence. Confidence. Like I don't know. It's just that simple. So that was that on this V10 index. Okay. So let's look at because we have and then to manage your trade is simple. I've said that before. Use the 50 EMA to manage your trade. Use of if you are scared of holding trade for a longer time, use the 50 EMA. You can see this is a 50 EMA, and then it's already price already trading below the 50 EMA on the 4-hour time frame, showing what huge bullish momentum. So, 50 EMAs are good for detecting a trend. And you can see when price was trading above the 50 EMA, it was all-time bullish. Now you can see the intent is shifting to bearish. So that's how you can hold your trade. Just put your stop loss way above the 50 EMA and allow price to do whatever you want to do. So that is that on V10. The same thing applicable to other synthetic pair that are running. Most of them are running in small profit, most of them are running small loss. You can see this one is also a swing. All of them are swing setup. So there is nothing to do. There is nothing to do. This one is still struggling, but you can see we're having a lot of things here. Yeah. So for ABCD pattern, of course, if you look at the harmonic mastery, you will study the ABCD pattern. The number of days and bars it took from X to B or from X to A should be almost equal to the number of days and bars it took from what? From B to C. It's just that simple. So you can see that this one it took what? And most importantly, the sine wave structural assessment. You can see the shape of this ABCD. That is the shape. It's not about the measurements alone. We are also much interested in the shape. Look at the shape. That is the shape we're looking at for. This is the shape. Perfect ABCD setup. That is the shape. So that is what we have here on V50 index. And then you can see 30 bars, 30 days, 29 bars, 29 days, approximately the same. So entry was from the 4-hour time frame as well. Okay. Entry was from the 4-hour time frame as well. You can see price also showing some intent of bullishness, already trading above the 50 EMA, and then it's still pushing back. 1 minute, guys. Let me just change the lights. Let me change the lights, please. 1 minute. So that is that on those. I've showed you guys the V100 index, the V10 index. This is V50 index. So entries from the 4-hour time frame, and there are two entries here. First of all, this entry was valid. Seller's exhaustion now. If it's even gave us liquidity sweep, bullish candle that engulfed, price came back again. In fact, it even came there. See, it came at the open of that, bearish candle. At the open of that bearish candle. Please mute your mic. Oh. It came at the open of that bearish candle. That was where it came. Second entry was also here. Bearish candle that dumped into a key level, followed by a series of bullish candle that engulfed. Entry again at the open of that bearish candle. Guys, this is simple now. You guys should study the course now. There are 3 videos. You have the RCC, you have the RCC overview. Then you have the in-depth, the RCC in-depth video and the putting it all together video. And you also have the PDF. You have the PDF guide now. You can keep it close to you while you are trading. Okay, so you have access to all of this information, and the trade is also running as well. It's also running. This is V10 and V50 index. Yeah, it's also running. Can see it's still running and it's still there. All these things are swing setups, so there's nothing to do. And as like I said before, always manage your trade with 50 EMA. Use the 50 EMA to manage your trade. You can add it on your phone. If you have your phone, you can add the 50 EMA as indicator. Just use the mobile phone. Just go to your settings, you add the indicator. Use it to manage your trade. Once price is already above the 50 EMA, there's nothing to worry about. Just hold your trade. That's just it. So that is just it. So you guys should you guys should take the things we do here serious, okay? And I wish you guys all the best. Now let's look at let's look at other stuff we have. So it's already running. So the last one now is there are so many of them. Now, V25 index, you guys should keep an eye on that guy. For those that trade synthetics, you guys should keep an eye on V25 index. If you watch the previous chart talk before bed, I talk about how to mark out key levels. Use the MT5 platform to mark out your key levels. If you also have the mobile MT5, you can do that on your mobile phone. It's still the same thing. Just make sure that you don't, mess things around. Like now, this is V25 index. I'm spending much time on synthetics so that forest and other ones. I'm not gonna forest. I'm gonna talk about entry timing, the time you should take your trade. That is all I'm gonna talk about for. I'm not gonna waste much time on too much time on forest. So you go to the weekly time frame. This is V25 index. Hmm. So you go to the weekly time frame. So on the weekly time frame, you mark out your key levels. Just zoom in, you can see. Now, look at how price reacted from the key levels in the past. You already watched the video on how to mark out key levels, right? So you know how to mark out your key levels. The rejection weeks, they are your key levels. Look at your key levels. Look at how price came back there. Look at all of them here. Look at all of them. They are your key levels. Now, price have broken out of this key level, which is fine. It uses as liquidity. And you can see that this thing is a liquidity now. Price have used all of these highs as liquidity. And it's pushing to somewhere. Price is already pushing to this place. This is what? Key level. This is key level. But then our 1.618 of this crab is somehow slightly above. I'll be looking at, even though price didn't fully test this 618, anything within here is a good level to look at for RCC. Look out for the reversal candlestick formations. It's just that simple. Imagine you bought V25 index at the beginning of this year, probably by February 25th, and you have held this to this point. You're a millionaire already now. You're a big boy. And knowledge can give you, there's nothing next, bro. Is there like by next year? I really want you guys to be, pulling out banks from this market by next year. And you need to go back, sit down and study the course. I want you guys to be pulling out money from this market with confidence, like with confidence. That is the level it's supposed to be. You understand? Because whatever we are teaching here works. Reversal candlestick, candlestick is the language of price. There is no dispute about it. There is no dispute. And harmonic patterns worked, and they work amazing. Since the inception of the financial markets, it has been working. Those that created it, most of them are, like I always say, most of them are not even, they are old technicians. This thing have been existing for decades. It's not something that just came into the market newly. It's been there for a very long time. So it's been proven to work. So everything we teach is para, key levels, very, very, very important. It works. So everything is clean, everything is sharp. Okay. Everything is sharp. You can see even here too, we had everything, mapped out. Okay. So the same thing here, you can see how this one is. Bullish candle that engulf, entry was there. The same thing here as well. Even here also, bearish candle that dump into this place. One, two. Entry at the close of this candle, you can take your entry. Price didn't even come back there. It shoot all the way up. It shoots all the way up. This guy is very crazy. Sometimes it's just like that. And you can see this one also. Look at your entry as well from here. Depending if you have a valid setup anyway. Bearish candle with two bullish candle, entry at the middle point. Price came there for a precise entry. I don't want to talk much on this. So look out for that key level. I'm seeing this setup holding just the same way I shared that of V100 index that is running now. I'm also looking out for this long term. So this is going to cool off, but we don't know how far it's going to be. So look out for you. When price gave me this, I came to the 4 hour time frame. I came to the 4 hour time frame. I did not see anything. I did not see anything at all. Look at it. There was nothing here. There is nothing here. First of all, this was valid. Let's just look at it this way. This was valid. This entry was valid. Why? Liquidity sweep followed by what? Confirmation candle. Wait for the confirmation candle to close. You take your entry. You make small banks before market reverse. But then there is no valid harmonic pattern. So why are you even taking the trade? 1.618 has not been tested and it's very, very foul. Very okay, it's close. Where are you, Seth? Where are you? I think the is not here. So let's make it 4 hour. Good. So it's very close. How many pips? It's not even that far. Just few pips to very, very close. So let's see what happens. Anything around here is a good level to look at for entry. So that is just it on this guy. So that is that on V25 index. Just give it a close monitoring. If you see anything, just let me know. I'll verify whether it's accurate or not. I'll verify. This guy is still running, he came back for the second time. This entry was also valid. He also gave us a scaling trade. Remember what I always say that if you have your harmonic setup, a swing harmonic setup, look out for scaling trade on the lower time frame. Look out for scaling trade on the lower time frame. Most of the swing setups, they are going to produce a scaling trade before price will move. Most of them, that's just the general outlook of things. Most times, they're always like that. So that is why you don't need to, like I always say, 50 EMA should be your this thing. Just hold on to 50 EMA, let it lead you, so I know how to manage your trade and when to close and when not to close. Okay. That is just it. Let me just delete this for now. So let this one finish loading. I'll explain some certain things for you guys on that. So this one is also valid. I don't know if I'm still holding the trade on V25 index. Let me look at it. V75 index. V75 index. V75 index. Okay, yeah, it's still running. Okay. So the trade is still running. The trade is still running. It's still running. So final target is there. So we see, let's see what happens because price came to a key level. Price came to a key level. Price came to a key level. You can see this is on the weekly time frame. This is on the weekly time frame. So let's see what happens. If we are going to have a push to the upside or price will keep going down. But then let's look at what price is doing with 50 EMA. Is it trading above it or is it still, you can see price is still trading below the 50 EMA. So we still have a lot of bearish pressure here. But then you have taken your trade, allow price to play out. If price end up rejecting the 50 EMA, then you can start, taking partials and moving stop loss to breaking. Let's look at the entries once again. This entry, you see this type of entry, it is a 50-50 entry. This is another type of buyer seller's exhaustion. When you see two candles with one bullish candle that engulf it, it is 50-50. You can take it, you cannot take it. It is not an A plus reversal candlestick formation. Now, but look at this particular one. This one is the A plus reversal candlestick formation. Bearish candle that dump into a key level or into a zone, and then we'll have series of bullish candle that engulf. It's just there. If you train your eye to recognize it, it is everywhere. So enough of synthetics. Let's look at this guy is also here. He's been going up and down. That has not even moved anywhere. So these are the only synthetic pair I trade. I don't trade all of them. These are the few ones I trade. So if there's anyone you trade, you want me to look out for, you can actually, if you have a setup on them, you can drop on the charts, look at to know whether it's verified. Okay. So now let's look at something very important. Now for forex, there are three timing you should look at for entry. Let's say, for instance, you have a valid setup. Okay? You have a valid harmonic setup on either on the 15 minutes, on the 1 hour, on the 4-hour time frame. You have a valid setup. Okay? Now, price has hit your potential reversal zone. Okay? And then you have your confirmation. Okay? You have a bearish candle that dump here, and then followed by what? Bullish candle that engulf. You have your confirmation. Now, this is your confirmation. I would love to use a different candle, but then let me just do something like this. Okay, so this is one of the reversal candlestick formation that we always see at our potential reversal zone. Now, this is actually, like I said before, is a true structure shift on the lower time frame. So instead of going down to the lower time frame to start to look out for structure shifts, from bearish to bullish, you just look out for these reversal candlestick formations, and that is just it. So now everything is ready for this setup to go, but there is something that is holding it back: time. There are three times. There are three based on time zone. I'm going to use GMT plus 1. It can convert to your own time zone. There are three important timing in the market where we always see high volatility in the market. That is when you should be taking your trade. So even though your setup is already ready, everything is clean, if it's outside that timing window, I would suggest you don't take the trade. Or if you're going to take the trade, reduce your risk. Now, what are the times? The first time is what? What are the time? The first time is, we need to make sure that the time, please take whatever I'm saying here very, very serious. Let me just adjust this. Okay, so the first time, I hope you guys can see my screen. Just 1 minute, guys. Let me just switch off, change the lights. Kind of today. Yeah, I hope you guys can see my screen very well. Okay. I assume that you guys can see my screen. Now, so the first time is 3 a.m. 3 a.m. Between 2 a.m. and 3 a.m. 3 a.m. GMT plus 1. That is the first time. 3 a.m. GMT plus 1. So if you have this setup, everything is ready. Wait for that 3 a.m. to take your trade. If by 3 a.m. GMT plus 1, that is when this thing is forming, you can take your trade. It is allowed. It is 100% allowed. So that is the first time. Now the second time is what? 10 a.m. London section. They call it London section, 10 a.m. GMT plus 1. Now there's always time zone, there is always shift in time zone, because last year we were working with 9 a.m. 10, 11, 2, we are working with 11 a.m., 2 p.m., and then 6 p.m. or thereabout. But this year it now came back to 10 a.m., 1 p.m., and the rest of them. So it's always the 4 hours intervals. The 4-hour candle will always tell you that. So Second time is 10 a.m. GMT plus 1. So if this setup is forming around 10 a.m. GMT plus 1, you come to the chart by 10 a.m. GMT plus 1, this entry is valid. Now, the Oga Patapata of them all, the boss of them all, the last time is what? 1 p.m. 1 p.m. candle. And the close of 1 p.m. candle, wait and see where the market is going to go. If it's going to go in the direction of your analysis or it's going to go against your analysis, you stay off the chart. 1 p.m. GMT plus 1. So these are the three most important timing you should look at for entry or you should take your trade. Everything is ready. Your setup is ready. Your confirmation is there. But then wait for the timing. Once you see the timing, you take your trade. Now, we are not going to use pending order for this scenario, except on special cases, but no pending order in market execution. You wait for this timing. Once this timing comes in and you can see the momentum, you take your trade. So let's look at some certain things that happened on the chart. First of all, let's look at Bitcoin. I hope you guys can see my screen. So I'm going to look at Bitcoin, look at gold, and look at one currency pair as well. Because my timing, are we looking at for this confirmation? On the 4-hour time frame, on the 4-hour time frame, on the 4-hour time frame, the reversal candle formations only on the 4-hour time frame. Only. Even your 15 minutes setup, come to the 4-hour time frame to look at for it. So I'm going to show you guys one trade that happened on Euro USD. That was this trade. You see this particular one? Yeah, I think it was 15 minutes setup. Let me check. It was 15 minutes setup. It was 15 minutes setup. I just hope it can load very well. Yeah, it was 15 minutes setup. Good. So it was a I know say this thing good. Fuck up. Let me just use. I don't want to waste much time. Let me use this particular one. So it was 15 minutes setup, but then the confirmation was on the 4-hour time frame. So use the 4-hour time frame for the confirmation. It's just that simple. So use it for your confirmations. Use the 4-hour time frame for your confirmations. Okay. So now the setup for this, let me see if I already have the markup. I don't know if I have it. Okay, it's already here. This is 1-hour time frame. Let me just switch off this guy. This was the setup. Let's look at that together. From here to this point. Okay. Now if you go through the course, you understand how to do this. It's just that simple. Once you train your eyes to spot all of this structure on the chart, it becomes so simple. It's so simple. It's not hard. It becomes very simple. Though this cipher did not complete very well, but it's still valid. Okay. So this is the cipher pattern here, right? Good. Now this is on the 15 minutes. This is on the 1 hour. Even on the 15 minutes time frame is even very much clean on the 15 minutes time. If you have a lot of candles on the 15 minutes time frame, still very valid. If you use this indicator is very powerful, oh, very, very powerful. Don't joke. You will make a lot of profit if you are using the indicator very well. You make a lot of profit. So, and then the last part of this section is going to be on pair selection. I'll talk more on pair selection and why it's important to do that. So that is the last part of this section. Let's talk about timing. So now, entry, very valid now. You can see bearish candle dump into a key level, series of bearish candle that go. But on the 1 hour time frame, you start to look at for your entry. On the 1 hour, you start to look at for the timing. First of all, when the price come to this key level to confirm this setup, it came around what time? Around 12 a.m. Okay. What happened by 3 p.m.? This is 2 a.m. This is 3 a.m. Do you have a setup on the 4 hour? Do you have a confirmation on the 4 hour time frame by that time? No confirmation. There is no confirmation. This was when we had a confirmation, this candle. And that is which time is that? 10 a.m. 10 a.m. candle. That was when we had the confirmation. But you can see that this engulf happened around what time? It happened around what time? 1 p.m. 1 p.m. guys. 1 p.m. 1 p.m. is still the same thing I talked about. Three timing. 3 a.m., 10 a.m., and 1 p.m. That is when you should look out for it. That's when you should take the trade. Take the trade. If you already on the chart, you see how the candle is moving, enter immediately. That is your confirmation. So this time is very, very important. Don't joke with it. Very, very important. Don't joke with it. I don't know if you have, I don't know if there's any question on timing. If you have any confusion on timing, please let me know. Please let me know. I think that is very self-explanatory. Which indicator is that you mean, harmonic indicator? It seems that you have not really gone through the course very well. You haven't gone through the course very well. Yes, that is the harmonic indicator. If you go to the HSM website, if you go to the student resources section, bonus section, oh, please, this website should load now. If I'm not on this call now, it will load very fast. So if you go to the bonus section, you will see indicators and software. You can install it on your TradingView account. Okay. And then there's also a video guide on how to use it. I think I've not uploaded that video. It's taking time to load though. Guys, something happened today. 5 minutes to NFP news, my data went off. My laptop went off. I don't know. The kind spirit where they this market. I want craze today. Like I really want. It was crazy. It was crazy, guys. Sometimes like this, things should be working out fine, but all of a sudden it should just go crazy. My internet just stopped. It was crazy. Like I said, what is going on? I was working fine. I was watching the chat, everything was moving fine. But 5 minutes to news, my internet went off, guys. It went off. I just have to try to recharge, oh. And all of a sudden it came back around 2 minutes after 1:30 p.m. That's 1:32 p.m. That was when it came back. I went to the chat. Thank God. My account was not blown. I was like, this spirit, no, no, no. This one is getting to you can see what this website is. I want to show you guys how to this website. I don't know what is going on. The network is so, but if you go to the learning tab, if you see the course resource bonus section, you will see the indicator. You can install it. I've already done a video guide on how to use the website. Please go through it. You'll be able to see how to use that. So now the next thing I want to talk about is pair selection. Now, the only way you can hold trade longer period of time is when you are trading less pair. If you have, like now, for pair selection, you should look out for correlation, pair correlation. Whenever Euro USD is buying, whenever Euro USD is buying, whenever Euro USD is buying, pairs like USD CAD, USD JPY, they'll be selling. Okay, so now in this Euro USD, we have GDP USD, we have AUD USD, and we have NSD USD. Okay, so here we also have other ones like USD CHF. We also have USD CHF. Yeah, we'll have USD CHF, USD CAD, and USD JPY. Okay, in that order. Okay, so now you don't need to trade. You can just start with 2 or 4. Just take Euro USD and AUD USD. Combine it with USD CAD and USD CHF. That's all. Or trade only Euro USD and USD CAD. Use the other one as confirmation. Now, if you go to the weekly time frame, if you're confirming your zones, as Euro USD is trading to a key level, USD CAD is also trading to a key level. And then until both of them get to that key level, they will never reverse.
one will be waiting for the other one. They'll be struggling. You'll be seeing how the market will be moving. The other one will be waiting for the other one to get to a key level before all of them will move in the same direction. That was what was happening. So you don't need to trade all the whole pairs. Just choose only two that are opposite correlated. So you can be able to know how to um do your so you can be able to know how to do your bias. So you can even estimate what is going to happen. If you are taking a buy on the other one and the other one is still buying, you know that there's a problem. Yeah, there's a problem. It's either that one has not gotten to a key level where that it will reach to reverse, or you are on the wrong side of the market and you need to close the trade. So always look for pairs that are opposite correlated and choose only two and trade. Now the essence is this one. You can easily hold your trade because now even small retracements, can make you close a trade if that pair is not the pair you are trading for a long time. But if that is the only pair you are trading, you can be able to withhold small retracements. Instead of closing at retracement and start to look out for another pair to trade, you hold a trade on retracement. Of course, you know that trade, of course, price will definitely do what? Come back in profit. That's how price move. You will see price moving. Let me just clean off all of this information. You will see price moving and then all of a sudden, for instance, you've taken your trade and then you start to see price. I have like 4 minutes left. So you start to see price. You've taken your trade, okay, and then you take your entry, and then as price is coming back, you already break even and you have already closed. There's nothing there. You don't need to do anything. Price can test your entry 2 or 3 or 4 times before moving. Price can test your entry 2 or 4 times before it moves. So price come back, there's nothing to do because that is the only pair you are trading. It went up again, it come back for the second time, does something like this. You keep holding and then you start to see what? You start to reap the fruit. And as it's pushing up, you start to look out for what? Scaling trade. It will start to give you cipher or shark. You will start to see all those bats. You start to look out for lower time frame until this swing setup is complete. Once this swing setup is complete, you now start to look out for what? For the reversal of the opposite side. Look out for your swing structure and all of that. So it is just that simple. 2 pairs is fine for forex, and then you can now trade gold and BTC on the other side. So for BTC, I don't really have much time, but then one thing about BTC is that I even fucked up on that BTC trade. Yeah, I fucked up because I didn't have much knowledge of what was going on by then. I didn't mean I had more knowledge by then. I would have held that shark pattern to that all-time high and I've made crazy profits because this guy Kellogg, we were there when I analyzed that BTC. That was last 4 months ago. I thought about that deep crowd. This is BTC's chart. I told you guys that I was good. You'll bear me witness. Good. I was looking out for that deep crab, and I told you guys that until price takes that 1.618, I'm not taking that buy. This is it here. I don't know which kind of trend line. 1.6. Oh god, this is a new this is a new Dix. But then look at what happened there. Very precise. Very, very precise. You can see. And look at that deep crab. Where are you? Okay. Look at that deep crab here. I always have the picture on my head. He came there for the first time. He came there for the second time. Now, if you go down to the 4-hour time frame, I didn't have the full knowledge. You can trade currency on Deriv now. If you use their standard account or their zero spread account, you have access to combine both synthetics and Deriv as well. You can trade both. You can see that here now I have currency pairs. I also have Deriv. This is their zero spread account. I have both of them that are running here. So you can trade both of them here. So now I want to know if you guys are following me. Look at this candlestick formation on the 4-hour time frame. Tell me what you can see. Or mute yourself and tell me what you can see. Did you see the reversal candlestick formation here or not? Did you see it? The reversal candles formation, they are there. They are there. They are there. Look at it now. Bearish candle that dump into a key level, right? With series of bullish candle at engulf. Good. Now, this is where patience comes in. You took your entry from here, right? You took your entry from here. Now, your stop loss, few pips what? Below this point. This didn't happen on Euro USD. It happened on GDP card. In fact, since last month up to now, that is how price has been moving. It's moving crazy, drawing some uninformed and impatient traders and taking out their money. Yeah, it took my money too. There was a time I have to close a trade, but I came back. I got another enter. I entered. It will test your patience. Like, it will test your fucking patience. I'm telling you. You can see this kind of thing now. It will